Tesla stock is up this week 8.4%. Tesla cut prices in the USA, and also there is a production cut rumor as well that Tesla will cut production in China. And of course, Elon declared war this week. All of this and more in this episode of everything that happened to Tesla stock this week. On Monday, Elon tweeted that Apple has threatened to withhold Twitter from its App Store, but won't tell us why. Elon, of course, does not want to pay the 30% Apple tax, which Apple collects from every single purchase on any app that has been made on an Apple phone if it's through an app. And Elon, of course, does not want to pay that because of the $8 subscriptions for Twitter. He would be losing a lot of money. So then he tweets this: pay 30% or go to war with Elon. This is what Elon tweeted. And it really looked like a full-fledged war. However, on Wednesday, Elon tweeted that he and Tim Cook, Apple's CEO, went for a walk. And of course, Tesla stock jumped. Maybe more people should go for walks. It is now also confirmed that Apple has resumed full ad spending on Twitter, which on Monday it seemed like Apple stopped advertising on Twitter, which is partially why the war started. And then more good news for us Tesla stock investors that advertisers are coming back on Twitter. Elon thanked all the advertisers returning back to Twitter, which is good because this means Tesla stock is less likely to be sold by Elon Musk to fund Twitter because Twitter is going to be making money. Tesla also cut prices in the US for all of the Model 3 and Model Y vehicles that are in inventory. This is for inventory cars only. So right now what is happening is a lot of people are canceling or trying to push their delivery of their own Tesla vehicle to next year so that they can get that $7,500 credit. Makes sense. So to fight this, Tesla is offering this temporary, or what seems to me temporary, discount, and they said it's going to be ending, and you can only get it if you buy the car, if you take delivery before the end of the year. And this is not really a big deal at all because remember full self-driving wide beta release? Well, now Tesla can recognize 100% of all of that revenue from all of the full self-driving beta sales. Before, Tesla could not do that. So when we take into account the profits that Tesla will make from that extra portion that it was not able to recognize before, now Tesla can do that $3,750 discount to about 30,000 vehicles without taking any kind of hit on the gross margin. I feel like I'm losing my voice. Maybe I've been making too many videos. This website shows all of Tesla's inventory in every country, basically. But we want to look at the US specifically. And the inventory has been growing by a little bit, even with the price cut, which is interesting. So we'll see how this is going to play out. But I think then the $7,500 credit goes into effect. Many people expect that Tesla is going to increase prices. So it will be surprising if Tesla does not do that later. But we do see that inventory building up for new vehicles. Not by a lot, though. This is still less than 1 day's worth of production. When Tesla cut prices in the US, Troy also updated his estimates, and now he's looking at 42 to 45% year-over-year growth, which actually puts him above consensus. If we go with the middle number between 42 and 45, we get 43.5, which would put Troy's projection at about 435,000 deliveries, and the consensus right now is about 430,000. And for Troy, this would be a noticeable jump in his estimate compared to his last public update that he shared with us. Also, deliveries in China surprised everyone. For example, many were expecting about 14,000 deliveries in China for a period of about 1 week, but we actually got 16,000. So many Tesla stock investors were celebrating because this put the end to, or seemingly the end to, possible demand issue in China. And Gary Black is updating his projection closer to 450,000 deliveries for the fourth quarter. This is an old tweet from November 13th, where Wall Street was not buying what Zach, the CFO of Tesla, was saying about deliveries for this year. He was saying that Tesla would grow just under 50%, which is well over 430,000 consensus of Wall Street. Here's a transcript with Zach saying on the delivery side, we do expect to be just under 50% growth. This is year-over-year growth, which if this becomes true, then the numbers between the consensus and what actually is going to happen, the spread is going to be huge. Wall Street is around here, 430,000. Tesla's guidance is around about 40,000 vehicles more. And last time this happened, this crazy beat, Tesla stock went up more than 10% from the day it closed to the day it opened. Next, Ross Gerber, who manages a fund of over $1 billion, says that Tesla stock is a buying opportunity. He specifically said, investors, be patient. This is a buying opportunity. Then we had this very bullish report from Electric, a reliable source familiar with the matter, told Electric that Tesla is currently preparing for 75,000 Model Y vehicles to come out of Gigafactory Texas next quarter in Q1 of 2023. If Tesla really does deliver on that, I mean, this exceeds expectations even of some pretty big Tesla bulls. For example, James, my favorite cat, is expecting 200,000 deliveries in his base case, but this set it closer to 375,000 from Austin, if indeed we do get 75,000 in Q1. That is, of course, because towards the end of the year, production really ramps up. We had this report from TSLA saying that legendary investor George Soros has tripled his stake in Tesla stock. And I looked at this and I first saw this and I was like, this is something just does not add up here. This is weird. Really weird, because I would not expect George Soros to be buying Tesla stock. If you know a little bit about him, I mean, he has a phenomenal investment track record, of course, but he doesn't exactly, I don't think, would love Elon right now in terms of what he's doing with Twitter. So this came as a big surprise. So I started digging into this. I'm like, I need to verify it. Is this really happening? Because, I mean, George does have a good record of investing generally. And so he tripled his shares. Now, if you 3x this number, it's short of just a few shares to be exactly 3 times the amount. So I was like, probably, this looks like it's probably true because, you know, at first I thought maybe it's just a split, you know, 3-for-1 split that we had. But then I started digging deeper, and then I found another article also from TSLA saying that at this time, right before the split happened, that George Soros's position in Tesla stock was about 20 million, so not a big position. He's a multi-billionaire. But coming back here to just now, The position is worth about $16 million, obviously, if you tripled your stake in August, let's say. Tesla stock did not go down so much, where if you actually bought a lot more Tesla stock, you would have less stock now in dollars than before. So always, if you see something that doesn't add up in the media, double check. Morgan Stanley released this new report as well, Can an EV slow down drive capital efficiency, in which they basically make a point that most auto manufacturers are so bad at using capital and money efficiently that basically, to simplify what we are saying, all of the legacy automakers stop spending money on EVs. Just go bankrupt already, basically, is what we are saying. We are basically telling, do not spend more money on EVs, just spend a little bit. You have no hope of catching up to Tesla. Tesla is very efficient at spending money. You guys are not, so stop doing it. We can just buy Tesla stock if we want an EV business. If you want to see a full breakdown of that report, it's going to be in this video. Tesla Semi has exceeded my expectations, actually. I didn't have high expectations. So let's start with that first. I think some people had very high expectations. For me, the main thing that I was thinking is that when they say fully loaded 500 miles, I thought that likely what do they mean by that is when the road is even and the conditions are favorable, it's going to go 500 miles. Maybe not fully loaded. Turns out, it's way better than that. It went 500 miles, fully loaded. It went through some very steep hills or mountains, you could say, and not just one, but quite a few. And also, look at this. It started with 97% battery, not 100%, and it ended with 4% left. So, technically, it's more than 500-mile range. And they shared that whole drive with all of us. It's available on YouTube. You can watch it. And no cuts. So that was quite impressive. There was one stop for a mandatory washroom break, of course. No charging, though. I shared why I'm not telling my family to buy Tesla stock, or at least no more. Don't buy more than what you are willing to lose. And number one reason, and this is all while I am buying Tesla stock, and that's the only stock in my stock portfolio. Number one is simply, it's very volatile. I know they cannot stomach the volatility. So that's reason number one. I have 6 more in this video or on Twitter. There was a massive announcement also during the Semi event that had nothing to do with the Semi. It had to do with charging. The Semi is going to be using a 1 megawatt charger, and Elon confirmed it will also be coming to the Cybertruck. That is a big deal because, for example, for this Tesla, maximum charging rate is 250 kilowatts only. This would quadruple this speed. For example, this Model 3 takes 16 minutes to charge to 50% and 32 minutes to charge to 80%. So if this could be sped up just by 50%, if you could charge to 80% in 15 minutes, this would be a big deal. Now, of course, even with a 250 kilowatt charger, you never really stay at 250 kilowatts for a long time. You just reach it for like one moment and then it goes down because otherwise the battery starts to degrade. But if they can find a workaround where they can actually improve charging speeds by even just 50%, that would be such a big improvement and very welcome improvement. And now we know that at least Cybertruck is going to have significantly faster charging than we all thought before. We had a new research report from Morningstar saying that Tesla stock is significantly undervalued. They put fair market value price for Tesla stock at $250 per share. Morningstar, by the way, has a lot of money under management, $265 billion. Then we have a rumor of potential production cuts that Rob shared with us. He said it's a reliable source, but this is just a rumor, he said. And only confirmed with one source, but it's a reliable source. And that source said that Tesla is going to cut production in Giga Shanghai starting from December 11th from about 20,500 vehicles per week down to about 16,000 vehicles per week. You may listen to this video for full information, but this is just in the rumor category, although from a reliable source, Rob Maurer says. Also, Reuters is reporting on Tesla potentially redesigning Model 3. The code name for that is Highland. And this seems to be pretty credible. And this would, of course, probably increase the margins for the Model 3, or Tesla would be able to reduce prices substantially while keeping margins high. Tesla is also likely doing that because it wants to take advantage of a $7,500 EV credit in the US, and there's a limit to how expensive a car can be. And if they don't make Model 3s cheaper, the higher trim versions, then these would not qualify for the incentive except for the cheapest current version only right now. I was told I am being a fool for buying the dip of a dip of a dip of a dip of a dip. But on average, during major recessions, the stock market goes down about 30%. S&P 500, by the way, then down about 25% already this year at one point. And in a period of over a decade, in this one particular fund that returned 29% annually, an average investor lost money because they sold at the worst possible time. Most people are so bad at timing. And then this chart. Average investor just matches inflation, while S&P 500 returned 7.5%. I mean, most people are better off just putting their money into index fund and not worrying about it instead of doing all this trading. So that's why I'm buying the dip of a dip of a dip. In the US, interestingly, most people that come to Tesla brand, most of them come from Toyota and Honda, which that's a big upgrade in terms of money that most people are willing to spend because Teslas are just so much more better. And then look at Tesla Semi's competition. This is Daimler, which is the biggest Class 8 truck manufacturer in the US, Freightliners specifically, and 250 miles of range only. But even worse, the charging is 1.5 hours to 80%. Tesla's website says that Semi charges up to 70% in 30 minutes. And then I made this video about Tesla Semi alone could double Tesla stock. That was a good video. We dig into the numbers and everything. You should watch it right here next. Make sure to like and subscribe if you haven't yet. My name is Matt Pocius, and I will see you right here. Thank you so much for watching.